It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And also not pay lenders' mortgage insurance. Those people will be able to return to the market. But our estimation is that that's not exactly a flood of people, and it will still be very, very difficult for first home buyers to enter into the market, particularly where it's very expensive, like, say, Sydney and Melbourne.
And that is Jocelyn Martin on the Real Estate Breakfast as we continue to talk about your property news and information 7 days a week from Port Douglas to Adelaide. And good morning to wherever you might be listening to us from. Well, Australia's home prices, they are expected to climb. No surprise in that. What is the figure? Well, over the next 2 years, 5 to 6% seems to be where the good money is, supported by lower borrowing costs after this year's RBA rate cuts. Analysts warn that affordability remains stretched, with prices expected to keep edging higher, and particularly, as we know, in Sydney, Melbourne, Brisbane, Perth and Adelaide, where they are expecting a forecast over the next 2 years between that 4 to 7% range. Well, it is a Wednesday, September the 24th. Australia's migration intake. Now, this is really bad because we talked about this yesterday. I mentioned 110,000 arrivals in the March quarter alone, but the migration intake has surged to nearly 500,000 people a year, and that is double the pre-pandemic levels. Now, just break this number down in your brain. That is 1,223 people every single day, making up 3/4 of the population growth. And critics say that the influx is intensifying housing shortage, driving the rents and property prices higher, and the speed and the scale of the intake is testing Australia's housing market like never before. And that is probably a good point there to bring in our next guest as we catch up with Jocelyn Martin, the Managing Director of HIA. And good morning and welcome, Jocelyn, to the Real Estate Breakfast. Yes, the migration, man oh man, this is such a talking point at the moment.
Well, it certainly is. I mean, the migration numbers are really adding to the high levels of demand and certainly not helping house prices, vacancy rates and so forth. But really, this is the result of really poor planning for many, many years in terms of migration numbers and not building enough homes. Now, when migration numbers have been peaking, it's probably at the worst time it can happen, because we just continue to have demand outstrip supply.
Yeah, and the other thing that you'll really be feeling with regard to this is if you look at your membership, people are leaving the industry. Builders are, well, they've sort of said to themselves, this is just too difficult. And that is a number that you're seeing growing year on year.
Well, that's right. We've estimated that we need about 83,000 new workers to the sector right now if we're going to actually meet the Housing Accord targets. Again, that impact of those migration numbers on demand is just tripling the problem in some ways, because we're not building enough homes. And then when we don't have enough builders and enough tradies to actually supply those homes, the situation is likely to get worse.
Yeah, from a political standpoint, you can see what the politicians are doing. Yeah, let's open up the floodgates. Let's welcome people into Australia. Let's drive the economy. Let's get the economy stimulated. They're always looking for the next term. If the numbers look great, that's fantastic. And the shortcoming that you're alluding to is the main piece of the pie, and that's housing everybody.
Well, I mean, we've been asking for decades for just stable and reliable migration settings. That way, the local governments and state governments can plan. They can plan the infrastructure. They can plan for housing development ahead of time. But consistent sort of underestimating of migration numbers has now meant that our estimation of the migration numbers that we're expecting is just completely out of whack with how many housing houses we're able to supply, but also the infrastructure that is being put in place too. And so, this is sort of years in the making, and now it's just becoming worse and worse.
Yeah, so it's all about the houses. The National Housing Accord, that aims to deliver 1.2 million new homes by 2030. Yet HIA data, it does show that the country is well off track. Only 168,050 dwelling commencements occurred in 2024, which is putting Australia, as you say, at risk of missing its target by hundreds of thousands of homes.
Well, yes, we're well short of meeting that 1.2 million homes target over 5 years at the moment. We're still in support of the target because, as we've discussed, we really need to focus heavily on supplying new homes. But at the moment, we're falling well short of that. Skills has a lot to do with that, but also the amount of regulation and red tape that is holding back the industry. And I guess we've been quite pleased and relieved to see the federal government recently make some announcements about reducing regulation and slowing down changes around the National Construction Code, and also looking at working on the backlog that is held back through the Environmental Protection and Biodiversity Act. So, those are the kinds of things that will make a difference. But right now, a lot of things are preventing us from actually building those homes and, bringing them to market.
Your membership is slightly shrinking as a result of your members leaving. You've got that conflated with what you're talking about with lack of skills and the red tape. What, from a political standpoint, like when you're in these conversations with politicians and you're saying, look, this is the drama that we're facing, we're not going to get that shortfall, because at the moment I understand your forecast is only around 986,000 homes that will be built by 2028-29. That leaves a gap, as you say, of 200,000 homes. Are they listening to you? I guess that's the question.
Well, first of all, I'd say that the gap in the 1.2 million homes is what we need to build to meet the numbers that you've talked about around migration. It's an ambitious target, but it's actually a very, very realistic target. And in some ways, I think it probably falls short of what we need to build, and still doesn't solve the problems around affordability and demand outstripping supply. But if we can get to that number, we will be well on the way of trying to solve the problem. A lot of our builders are sort of essentially just tired of the regulation. They're leaving the industry because an industry that was once very rewarding, that was something that was very creative and indeed quite profitable, is now not the case. It's just really, really difficult to build homes in Australia. It shouldn't be this difficult. The federal government are listening, but it's complicated. It's complicated by the different layers of government between state and federal and local government. And every single layer of government has sort of a different level of regulation that is needed to cut through. And so this sort of significant coordination from the federal government, states and local government is needed. That's very, very difficult. Whilst they are listening at all the different layers, it's that coordination that's still lacking.
Yeah, because the builders themselves, they've got problems like limited land supply, slow planning systems, rising taxes and charges, and stubbornly you've got the high material and labour costs. Then if you look at it at the other end, you're trying very much to attract new blood into the industry. You've got two different things happening at both ends of the scale. As the managing director, this must be very, very frustrating for you, Jocelyn.
Well, it's frustrating, and, there's never a dull moment. Let me say, there's just plenty of work to do on that. And look, we've estimated that about almost 50% of a house and land package in Sydney is fees, taxes and additional charges. And a lot of that has to do with the length of time that it takes to actually get a home to market in the first place. So all those costs of and financing a project until it can get to market are things that add cost to the consumer in the end. So those delays, if they can be cut and they can be sped up by reducing regulation, then we can not only reduce the burden of red tape on builders, but also reduce the cost to the consumer as well. But at the moment, it's just out of hand and it's not getting any better.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast.
So the first home buyers, as we know, they're facing the toughest affordability conditions in a generation. What do you think about October the 1st? This is a date where first home buyers are looking to hopefully borrow more and just having their situation alleviated somewhat, which might help stimulating somewhat the industry.
A lot of our volume builders are reporting a lot more optimism in the market, and I think that has actually come as a result of the handful of interest rate cuts that we have seen, and hopefully anticipate that will continue. And some of that optimism, of course, at that point there was coming from first home buyers. Certainly the first home buyer guarantee that starts on the 1st of October will also probably see more first home buyers being able to return to the market. But at the same time, key markets like, say, Sydney and Melbourne are really out of the reach of many first home buyers anyway. So regardless of, whether people believe that it will have some impact on prices, the reality of it is that they can't borrow enough, whether it be 80% or 95% for a home in Sydney that is sort of $1.6 million. They can't afford to service a loan on a property that's that expensive. And so, so whilst we will see some support to some people who have actually really struggled to get that deposit together and now have an opportunity to enter into the market with a lower deposit and also not pay lenders' mortgage insurance, those people will be able to return to the market. But our estimation is that that's not exactly a flood of people, and it will still be very, very difficult for first home buyers to enter into the market, particularly where it's very expensive, like, say, Sydney and Melbourne.
Well, it's not an enviable position to be in. Thank you so much for coming on to the Real Estate Breakfast, taking some time out to sort of break some of those key points down. Good luck, I guess, over the next 12 months. Get over Christmas and then you never know, Jocelyn, 2026. Let's try and stimulate things a little bit more positive. Let's hope that 26 we start to turn a corner, dare I say it, but easier said than done.
Well, thank you. But I think there are some green shoots, and I do think 2026 is going to be very positive. I think that we are working very hard with government to try and reduce some of those regulatory barriers. I think, and that's actually probably the first time that we have really had a relationship with the government that is pushing in that direction. So I'm very optimistic for 2026.
Let's fuel your passion for property together. Join us, along with our industry experts, to help inspire and inform your next real estate decision.
We always talk about it, but it's not about who you know, it's who knows you. And I think whilst your networks and your contacts can certainly add a good layer to your business, it's the real fundamentals like getting on the phone and grafting away. And what comes with that is just a lot of hard work.
Yeah, and a common mistake for young agents is trying to talk too much. But real traction often does come when an agent strips all of that back and becomes just comfortable in your own skin. That is such a key, is be you, be real, and be authentic.
Absolutely. I went through that revelation of trying to understand who I was and how I could get the best out of myself, and more importantly, being who you are as far as not trying to be anyone else. You're mostly sitting in front of an owner of a property in their lounge room talking about their biggest asset. I think that goes a long way, your knowledge in terms of being confident in who you are rather than pretending to try and be something else.
We connect you to the best real estate information across Australia. The Real Estate Podcast.